Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on Facebook the day after earnings, and after a very bearish reaction to earnings where we rejected from the upper Bollinger Band and closed down near the low of the day, a sigh of relief for the bulls that they did not break that low. Still were very close. It was a pretty weak day with that long upper wick 2 days in a row, lots of profit taking, but that's the one thing the bulls can come away with. So support is 130.40. The key support I'm looking at is the low of these consolidation periods. So the first one is up here at 129.52. Then we're looking down at 126.78. And those are the next two support levels to be watching to maintain the strongest higher low uptrend. So again, bears are in control and we're close to a breakdown. The middle, or I should say the MACD is on the verge of a bearish cross. The middle Bollinger Band will be a support that's going to line up near 129.52 support. So we will be watching both those levels. It's an inside bar here where we have the inside range compared to the previous day. And on the weekly time frame, it is a bearish reversal candlestick. So look at this resistance here. I'm going to draw this line in where even though we hit a new all-time high, if we put our resistance there, the highest price the weekly chart has ever closed on, we are rejecting from this level. So it's 1, 2, 3, 4, 5, 6 touches and rejections with no candlestick able to close over that mark. And it's currently at about 132.50. So that is a resistance line that I'm going to be watching. And with this bearish reversal candlestick on high volume, a red week next week, we will be looking to pull back. And this is coming after a month of significant upside. So I would not be surprised to see some short-term consolidation at the least, even though the S&P 500 bulls are very strong and at all-time highs themselves. So looking at the 5-minute time frame for Facebook, we had the bulls show up in the first 20 minutes with a huge move to the upside. That's the high of the day set early on. And then we saw a tightening range. We consolidated, we formed support, and down at the low of that consolidation is 132.12. We bounced and formed a lower high. And this is what I'm talking about, where a lot of time people feel like they have to jump into a trade. And it's almost like this rush feeling, this nervous, like I got to do something. I'm just sitting here. And that's not the case at all. The first 15 to 30 minutes are the most high risk, high reward of the trading day. And if you are patient and wait, there are plenty of afternoon setups where you can utilize the price action of the previous however long in the morning and trade off of that. So here's our high, our low of consolidation, our lower high. And as soon as we break that support, we know that we have a lower high and a lower low, and we know that the bears are going to be in control short term. So do we know that we're going to see a pullback for the entire rest of the day? No, we have no idea how much downside we're going to get. But we are in the trade with momentum at our backs. We're in the right direction, and we can always exit for a small loss at the worst or break even if this bearish move does not amount to much. So as soon as 132.12 broke, there's your bear signal. And then from there, we dropped fairly quickly down to 131.50. So you're already profitable. We bounced and rejected from exponential resistance a bunch. Bounced and rejected again. Lower highs, lower lows. And then that could have been your entry or your exit point for the bearish trade once these exponential moving average resistances, which did reject multiple bounce attempts, became support. So that would have been a down at 131.40. This is really nice gains on a Friday in a weekly option. And even if you had some more conviction to keep holding, it was just lower highs and lower lows till the end of the day and a very weak close. So we are going into Monday with the bears having momentum, and we're in a channel on the hourly. Look at us after hours yesterday bouncing off the 200 period hourly support. So we're going to be watching that level at 130.32, and the bears have momentum. So we'll check back in. I hope you have a great weekend. See you soon.